right, I'd like to welcome everyone to the July 13th meeting of the Oklahoma City Public Post-Employment Benefits Trust. The first item that we have is the approval of minutes from the special meeting on June 10th, 2015.
Move the item.
All in favor?
Aye.
So we're going to have to alternate doing moving items, I guess. We'll just switch back and forth between the two of you. The next one is to receive the monthly investment report from Doug Anderson. He's here with Gregory W. Group. We'll let you talk first and then we'll vote.
Okay, thank you.
We'll see if you want to approve it or not.
It's a Monday.
Yes, that's right.
Taking a look at the first page of the monthly performance report, you can see how uneven performance has been in the financial markets. You'll see that equities, both domestically and internationally, have had a difficult patch. Domestic equities by the S&P 500, you can see cap weighted down 1.9% on the month. Internationally, the MSCI World was down 2.8%, and things have been a little bit dodgy so far this month, early part of July. What do we have to thank for this? We have Greece to thank for this. We have the Brexit, or the potential exit of Greece from the European Union for this. We have China issues where one of their major equity markets is down significantly just in the last week and a half. So there is some unease in the markets. Traditionally, what we've seen is that when there's unease in the equity markets, long treasuries do well. However, with the Janet Yellen and the Federal Reserve Open Market Committee comments, the long bonds are not trading as they have in recent past. However, over the last year, the bond total returns for the long treasury up 6.3%, which is a good return. We have recently dropped off some of the excellent returns of the 30-year treasury index. However, we think that it is still a good risk mitigator. As you go down, you'll see that the only good places to invested were small caps during the month. Indeed, small cap growth was the best over the trailing year at 12.3%. But just noting all of this, the returns have come down. We have dropped off some good months. We've dropped off some good quarters over the last year. However, last 3- and 5-year returns are quite strong. Moving to the following page, again, noting how much more diversified the portfolio is by line item here. Looking down at the bottom line, $35.8 million total market value. Slightly positive return for the month, slightly positive return for the 3 months ended June 30. Just missed the actuarial assumption over the 1 year, a 10% annualized rate of return over the 3 years, and 5 years at 9.3%. Again, what we're aiming for is to beat the actuarial assumption as consistently as possible with low downside risk, or minimizing the impact of large negative returns. And you can see that even during a topsy-turvy period for the markets, that we're very close to making that rate of return. Starting at the top and moving down, we have added the dates of inception for the newer managers. You'll see Loomis Sales Bond is the most aggressive bond and possibly the one most invested in non-U.S. equities. It's something that they've done, or non-U.S. fixed income, I beg your pardon. And you can see that over recent periods that has hurt their results. This is a fund traditionally that has gone in some unusual places for bond managers, and that has hurt them over recent periods. Long-term results in the shaded area still show them top quartile. The next fund down is Double Line Bond, and they have done better than the Loomis Sales Bond because they have a slightly more risk-averse profile, and that's why we picked the two of them to go together. Listening to Jeffrey Gunlack's conference call last week, the lead portfolio manager there, not seeing a lot of room for takeoff in the U.S. economy. Things will probably remain stable, not 4% growth per year, but more like 2.5% or 2% growth per year, but very, very low inflation. Position the portfolio accordingly. Lord Abbett High Yield, which was funded 1/21 of this year, January 21st of this year, and you can see that over the last 3 months, positive return. It is unusual that high-yield bonds, more risky, have a positive return than the core fixed income or lower risk. and that gives you it really depicts how unusual market performance has been. So that's been highly additive to results. And you'll see that our risk mitigator, the Hoisington Fund, all treasuries, right now all long-term treasuries, did underperform. This is something we have seen in the past. This is a 3% position of the portfolio. It's not something that we are tremendously concerned about, because we have seen the market move against them over the short term, but going out over the long term, the performance has been very, very good. This is a portfolio that will take the duration of the portfolio from 18 years, where it is right now, because they're expecting long-term interest rates to stay stable or go lower, which is something they've been consistent with since the early 1990s. If they see the economy taking off, if they see inflation, if they see interest rates moving higher, that's when they will move the entire portfolio to short-term bonds, and that will help in a rising interest rate environment. But looking at them and what we're hearing from Hoisington, what we're hearing from Double Line as far as the economy in the United States, very consistent, which is something that they are two of the outliers when it comes to realistic projections of what the U.S. economy should be doing later this year. Going for the equity portfolios, again, new structure here, new sort of philosophy of having an index fund and then an active manager to reduce risk on all of these or increase returns. You'll see that the Vanguard 500 index, 18% of the portfolio. So we reduced the allocation to Dreyfus Appreciation, the low-risk equity manager, by half. And we added it to the Vanguard fund to give spot-on market tracking. And you'll see that during the 3 months, it was spot on. I don't think that one-year result, and I apologize for that, I don't think that's correct. I think that our database had an issue with that. I will double-check both of those figures and report back to you later this morning. The Dreyfus Appreciation Fund, the one that has been involved for a 3-year period, again, very low risk, very stable companies, a lot of non-U.S. exposure and diversification. So while a 10.7% rate of return is on an absolute basis good versus other managers who are investing in, say, biotech or more heavily in biotech, they have trailed. But again, this is a fund that we like for its downside protection. We're trying to minimize the chance of large losses here. As we go down to the mid-cap index fund, you can see that it's tracking its benchmark fairly closely. If you see Hotchkiss and Wiley suffering a difficult return because they're increasing their exposure to energy. As they are value hunters, they're going to buy companies that are selling near their 52-week lows rather than 52-week highs. So this is a performance pattern we're used to. Looking back over the last 3 years, the last 5 years, the last 10 years, the last 15, true demonstrable value protection here versus their benchmark. The Stevens Small Cap Growth is recovering nicely versus its peers. The last month, very nice, but again, the hardest part for small cap and all growth managers right now is that if you're investing in a rational process, you're going to be staying away from these biotech companies that are cropping up, going public with no earnings whatsoever. Something that really reminds me of the internet bubble in the early 1990s that is propelling most of these small cap and these growth index returns right now. So we're willing to wait with them. We understand that they're not going to invest in a biotech company that has one product, it's in stage 1 trials, but is rocketing higher. That's not something that we want them to be investing in. What they are investing in, one of the themes that I think I've brought to you before, is internet security. They have 3 positions within the portfolio. It is something that corporate America and indeed public and government America is having to spend a lot of money on right now, and they're right in the middle of that. So that is something that we see value in, that they see value in. But as long as the market, that part of the market is being propelled by biotech companies, they're going to underperform until that market breaks. And we all remember what the internet bubble looked like when it did break. International equities, tremendously difficult. You can get your European exposure right and have too much in emerging markets, and over the short term it's not working well. But over the 3 years and 5 years, and even the 10 years, Causeway's done extremely well. We like the team. We like the firm. They have a longer-term bias, like most of our managers do, and their performance over the long term has been quite good. Minimal amount of cash allocated here, $2,782, keeping cash as reported in the portfolio at a minimal level. Happy to take any questions.
Are there any questions? All right, so we had a motion and a second to receive the report, so I'll take a vote.
Thank you.
All right, all in favor?
Aye.
Diane had already seconded it before we started. Okay, any opposed? That was very confusing, but we've received the report now. Next item is to discuss the upcoming merger. No, we made it confusing. I helped. Discussion of the upcoming merger between Gregory W. Group and the Bogdan Group.
Thank you.
Doug.
So I started at the firm in 1991, which is quite some time ago. I had hair then, and not much of it was gray. But over the past 2 years, our firm has done a significant project to try to really figure out our course forward. As you know, we've always been independent. We've always been very conflict of interest free, and that's something that we've banged our hands on the table like Nikita Khrushchev for the entire history of our firm, saying we're not going to take money from managers, we're not going to take compensation from anyone but our clients. So going forward, we have decided to combine with a larger firm. It's the Bogdan Group. They're based in Florida. If you've been to the pension conference in the fall, I think they hosted it a few years ago because they consult to the firefighters' pension fund in the state. Bogdan Group is younger than us, but they've grown faster than us, and one of the ways they've done that is by maintaining a lot of these goals that we have and a lot of these morals that we have, if you could say that. So we are merging with them effective October 1 of this year. We will become one of several offices that they have. Their main office is in Orlando, Florida. We've been down there. We've met with them. They've been to Tulsa. They've met with us. They have offices also in Chicago, in Pittsburgh, in Cleveland, and in Dallas. Our office will be staying in Tulsa. I am staying in Tulsa. My colleagues are staying in Tulsa, and we've been identified as a strategic site. We are keeping our client roster as it is, which means that you're not going to see somebody from Bogdan Group next month or after the merger. So we are integrating ourselves into the Bogdan family, if you will. What does this do for us? It gives us additional resources. Our group has $17 billion, roughly, in assets under management in our Tulsa office. When we're combined with the Bogdan Group, we'll have $55 billion. So we're a meaningful part of the organization. There are 29 consultants at the firm, Bogdan, after will be added in, so that's adding 3 of us to that. So we get significant resources from that. It is a change, and being in the firm as long as I have, this was not something that came lightly. The process, like I said, took 2 years, start to finish, and we came very close to merging with another firm partway late last year. But then at the last minute, 11th hour, we decided that firm wasn't for us. So it is with a lot of deliberation. What's right for our clients? What's right for our careers? What's right for our futures? And we think we made a great choice. We go from the 50th largest consulting firm to a top 10 consulting firm. And as far as we can tell, the only pure play consultant in that top 10 list. And we're very, very adamant about that. I have to be on the same side, effectively same side of the decision table as our clients, or otherwise, I don't care how many times I disclose that I have a conflict of interest. It's still going to make me uncomfortable, and it should make you uncomfortable when we're recommending or looking at new items. So, effective date of the transaction is October 1st of this year. It was announced the week before July 4th. There will be more notifications coming forward. And I'm very pleased to bring this to you. It's a good future for our group. It's a good future for our clients. And as skeptical as I can be sometimes, and as much as I had competed against Bogdan in the past, I'm pleased to be joining up, as everyone else in our group is.
Very good. Are there any questions? So we'll be working through with Bob on the contract language and getting all that back through so we get that approved prior to that time.
Absolutely.
For the effective date.
Yeah, we've already talked through that. The process, very briefly, is a consent form that assigns our contract that we have from us to the Bogdan Group. All terms remain the same.
Excellent. All right. Thank you very much, Doug.
Thank you.
I do have a comment, Mr. Chairman.
Okay.
Doug, I congratulate your firm on the new, I understand about change. We've all been through change, so we know it's tough. One of the things that I just want to say out loud, because when we selected your firm, we were really deliberate about trying not to be too small a fish and too big a pond. And I just want to remind you that that's still important to us. And even though at $35 million, we're a lot bigger than we were when we started, I still recognize that we're a pretty small fish in a $55 billion fund. So I just want to say, please don't throw us back. Please remember that our assets are really important to us as a trust.
And I think one thing Doug and I had talked a little bit about this issue, and one of the things Doug was explaining, I wish you'd explain here, of what you believe it offers to you as far as your time and what you can do devoting to your clients.
Absolutely. Thank you for those comments. Two things on that. You are assigned to me by contract. In my employment agreement, this is assigned to me. I am the person responsible for it. So I've been with you guys since the beginning. You're very important to me. At $3 million, $35 million, it's I can't say it's immaterial, but it doesn't matter to me. So I hope you know that won't happen. One of the things about the Bogdan Group that's different from us is that we have 17 billion, 24 clients, right? So their firm actually has a lot more clients with smaller asset bases. So they know how to process performance reporting, et cetera, for smaller clients like this. So they have a lot of municipalities in Florida and police and fire funds in Florida, so they're very used to this. They understand that it doesn't matter the size, but you have to do the work all the same for them. So hopefully that assures you of that. And Chairman, what you were saying is that, okay, my time right now as president of the firm is I have to be a consultant first, but then I also have to administrate. And as everyone here knows, HR, regulatory, all of those issues continue to take more and more and more of my time away from consulting, which those issues will effectively be taken off of my desk. I'll have additional consulting duties. I'll have investment committee duties, but it will really get me to what I love most. I don't really like doing HR that much, and I really don't care for filing regulatory paperwork, but it's something I've done. And so my time will go from approximately 70% consulting, 30% admin, to very close to 90% consulting. And I didn't want to give away too much of that, but now I'm like, okay, it's time. I'm okay with that.
So to your point about reporting, will we see a change in the format and the look on our reports?
The logo definitely will change.
Right.
That part will change. But what they're working with us, so their performance system is considerably more robust than ours. So if you see anything, it should be better. There should be an improvement in the reporting process itself. And that was one of the things that we were thinking about, because upgrading an entire performance measurement system for all of our clients was going to be very expensive. And so by combining with Bogdan, we don't lay out that expense. It's already done. And I will tell you, as far as the integration process goes, performance measurement has probably taken more time than anything else. and that's something that they're very organized on, and we're spending a lot of time and resources to get it right. So there will be a change. I think my business cards have been ordered, but I don't get them until October. So there is some change. I anticipate there might be a bump in the road here or there. I think that's realistic, but as far as the service we're delivering, as far as the reports we're giving you, I don't see anything that will be of material change.
All right. Any other questions or comments? Thank you all very much.
Thank you.
Doug. So the next item we have is any additional asset allocation. I don't believe we have anything that we're looking at this point. The next item is to elect a vice chairman for the committee, and I would take nominations. Currently, Laura is our vice chair, and we did that, you remember, I don't know, it was a year or so ago that we did that to ensure that if we ran into a situation that I wasn't able to attend the meeting at that point, we didn't have someone assigned as vice chair to be able to chair the meeting. And so, all right. Laura, your campaign was successful. You're going to be the, we'll vote on it. We'll vote before you do your acceptance speech, all right? All right, all in favor?
Aye.
Any opposed? All right, now you can do your acceptance speech.
Okay, it did say 3 affirmative votes required, so I guess we have to all be recorded as...
Yeah, I voted aye.
I just wanted to say this was the easiest job I ever had, because I don't think I had to serve in it one time. So, yeah,
Hopefully we'll keep it that way.
Yeah, I agree.
All right. Next item is to ratify claims listings. Can I get a motion?
Move second.
All in favor? Any opposed? All right. Any reports, comments from trustees, staff, or any other interested parties? Nothing? All right. Hearing none, then we are adjourned.